Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Friday, it's the 2nd of June. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. If you want to send me an email, that's the email address to send it to. I am going to bring up our disclaimers. We'll start off with a high-risk investment warning. Okay, and let's just bring up the commentaries disclaimer. And finally, just our references, market scope and trading view. We'll generally be using market scope today. I'll bring up the US dollar. I think this is a good place to start. Yesterday, when we looked at the US dollar, it actually looked as if it was potentially going up. This is the ellipse. This was the ellipse that we drew in yesterday. We saw that the stochastic had crossed up, but effectively, we talked about a divergence in terms of an overbought risk market, an overbought NASDAQ, as well as the fact that there is now most likely going to be a skip. They're calling it a skip in terms of the rate hike. So they'll skip the June rate hike to monitor. And the debt ceiling deal was ratified by the Senate yesterday. So it was the ratification of the debt ceiling deal, and effectively the fact that interest rates are effectively being skipped, not paused, and the market effectively sold down the US dollar. And with the US dollar being sold down, we saw a risk-on environment materialize. So if we go through to the NASDAQ, you can see that the NASDAQ was moving up. Let's just go through to the US dollar and do an analysis. It's quite a tough market to analyze. And I think the reason that it is a tough market to analyze is because we've actually got no trend here. We're not working with a trend. What we're effectively working with is 3 points, and we need 4 points. So we've got a trough, we've got a peak, we've got a higher trough. This is on the weekly chart. We do have the RSI popping above 50, but who's to say it's not oscillating around 50? And that's the key. So I don't know if we're getting a higher peak here, okay, or a lower peak. I don't know what we're getting. At the moment, it's a lower peak. So if it's a lower peak, we're not dealing with a trend. And if we're not dealing with a trend, trading is going to be much harder. We've said it before that trading consolidations is much harder than trading trends. Well, if we've got a higher trough and we've got a lower peak, we've got a consolidation. What type of consolidation would we have? We'd have a triangle. I'm not sure we're going to get that or not, but it's a distinct possibility. And then the question is, well, which way do we break? Do we break upwards or do we break downwards? And this is going to be a function of monetary policy. If the monetary policy is higher for longer, I would think that it would be net dollar supportive. If that skip turns into a pause, then I think that dollar effectively comes down. So we're at a crossroads, and that crossroads making it very difficult for us to effectively trade. Lack of trend. Okay. What I can say with a fair amount of certainty is that the NASDAQ is overbought. And it's not to say that we can't carry on going higher, but I would suggest that there is some sort of ceiling, that we're pretty close to the apex. So even if we go higher, I think that there must be some sort of limit. Look how overbought we are on the NASDAQ. The problem with that is that it's on a weekly chart, and a weekly chart makes it very difficult for timing. But if we go down to the daily chart, okay, let's just go down to daily, there is an overbought condition as well. Okay, and effectively, what you can see is, I don't often use divergences, but we've got price moving upwards, and we've got RSI moving sideways. So there's a divergence there. So I'm of the opinion still, even though the market's moving up, there's no doubt about it, is moving up for the time being, that there is a skew to the risk reward profile. Now, if there's a skew to the risk reward profile, I think we have to pay attention to that, because we want to try and trade when the risk is not heightened. But if there's a heightened risk, it means that we may be sucked into the market because prices tend to be buoyed, but there is going to become a reckoning where the RSI effectively is going to normalize. Now, we've got the non-farm payroll coming out today. We're going to do a live trade on that. Let me just put in the link for the non-farm payroll. It's in the chat now, so you can go ahead and you can go ahead and register if you'd like to, and we'll do a live trade on a live account. And I think it's going to be a very important jobs number. What we've seen is we've seen inflation that is sticky. Okay, it's resilient, and it's not coming down to that 2% target. We've seen consumer spending increase, and we've seen generally expansionary type of data. If we get expansionary data in the jobs numbers today, in the non-farm payrolls, I think effectively we may see the dollar supported. And if we see the dollar supported, I still think we may have a sell-off in the risk-on assets. Now, it's very difficult to make this type of commentary when the markets are moving in the are moving to the antithesis. They're moving, so the risk markets are moving up. The haven markets are moving down. That's the reality of the market we face. It's a very, very difficult market. And the reason I think that the market is difficult is because we've got a lack of trend on the dollar. One thing I did notice yesterday, and again, it adds to the complexity of the current market that we're in, is if we go through to the euro-US dollar, okay, and if we go through to the daily euro-US dollar, it was oversold. So on the euro-US dollar side, it did make sense that there was some sort of movement up in the euro-US dollar. If we take a look at the US dollar on the daily, the US dollar registered as overbought a few days back. That's kind of cleared. So the overbought and the oversold conditions have cleared. Okay, the daily conditions have cleared. I think the overriding overbought condition is on the weekly side of things. So we want to pay attention to that. I think I've got a comment here. Just bear with me. Hey Howard, morning to you. Nice to have you on the webinar as always. So we've got this tricky environment ahead of us. Let's take a look at what's happening on the DAX side of things. I thought the DAX moved quite interestingly yesterday. It was in zone 3. Okay, it was in zone 3. And all of a sudden, with the fact that we were going to have this ratification of the debt ceiling deal, the fact that we're having a skip in terms of the interest rate, it's rallied. And not only has it rallied, it's sitting in the upper quintile. As long as we're holding that upper quintile, then there is going to be a risk-on move. Okay. let's just work through a couple of sentiment type of analyses, and then we'll take the questions. Let's just go through to the weekly chart here. What's interesting here? If you take a look at this lower peak, okay, what's interesting here is when we actually combine the last two candles. It's Friday now, so we've got most of the weekly trade inherent in the candles, but we are missing key data. What are we missing? We're missing the non-farm payrolls. But when you combine these two candles over here, okay, here is the here is the high, here is the low. Okay, here is the open, and here is the close. So what do we get here? We get a gravestone doji. So you can see that what we have here is the bulls pushing up to the high of these two candles. At the high of the two candles, the bulls lose control, and it's the dollar bears that are in control. That's interesting. Okay, where this ends today, I think, is going to be highly influenced on the non-farm payrolls. Okay, another sentiment that I want to show you guys is gold. Let's just bring up gold here. Take a look at gold. Now remember, gold is pretty close to that all-important 2000 level. The 2000 to 2100s acting as very strong resistance. Here's the high, here's the low. Where's the open? Where's the close? Looks to me as if we've got some sort of dragonfly doji. Okay, so there is resistance. There's no doubt that there's resistance for the dollar. There's no doubt that there's some support that's coming through for the gold trade. How that really pans out, in my opinion, comes down to the risk on overbought condition. This risk on overbought condition to me is, again, highly risky. If we get sucked into the resistance on the dollar, if we get sucked into the support on gold, and we start seeing the risk markets starting to normalize, we might be caught on the wrong side. So I want to reiterate that it is a very, very tricky market that we find ourselves in this week. Let's see if the non-farm payrolls is able to clear that up to some extent. Please join me for that this afternoon. We'll do a live trade in a live account. Okay, having said that, are there any questions? If there's any questions, please go ahead and type this through. Any questions? Please go ahead and type those through. All right, nothing coming through. So I'm going to wrap up here, and I'll see you guys later in the day. Thank you very much for joining, and have a good morning, and I'll speak to you this afternoon. Cheers, guys.